It's Brian Preston, the money guy.
Here's the cool thing. I get a little shelter on picking on this product is because I wanted to attribute to one of our local neighbors here. Whole life insurance. I don't have to be the bad guy on this one because I used all the data that I was able to go find from Dave Ramsey. Dave Ramsey's here, one of the local heroes here in the Nashville, Franklin area.
That's right.
And it's so interesting, because whole life insurance, and here's the thing, I have recommended permanent insurance to some clients in the past. So I want you to know there is a place for it. But I will tell you that I think the lion's share, a lot of people that are being sold this product could do better with term insurance. All of my personal life insurance is term life insurance, and I have millions. But let's look at, and this, I love how Dave labels this because this is brilliant. This is his label, so send the hate mail to Dave. See how I'm hiding behind his skirt right now? Quote, payday lender of the middle class. That's what he calls whole life insurance. So you hear that and you're like, wow, that's harsh. But listen to this. Dave's got stats. $5 versus $100 a month for the same insurance comparing 20-year term versus whole life. That's a 19-time difference for the same coverage.
So you can pay $5 a month for term or $100 a month for whole for the same amount of coverage.
That's exactly right.
You kick it, your family gets the same amount of money.
Same amount of money. So that's the part. That's why Dave says with that 19-fold difference, you'd be much better served buying the term insurance and then letting your money work for you outside of the insurance protection.
Yeah, but Brian, the reason people do whole life insurance is because you pay for term, and if you don't die inside that term, that's just wasted money. At least with whole life, you're building up some cash value. It's growing.
That's the thing. I chuckle internally a little bit when people pitch insurance as an investment. Because remember, what did I tell you earlier in today's episode? Complexity creates more cost. It's not cheap. You don't get insurance products cheap. I don't see many, you see people like TIAA-CREF and Vanguard are starting to seep into annuities and other things, but majority of the time, especially like whole life insurance, it's not cheap. So here's the rates of returns. This is also coming from Dave Ramsey. The actual rates of return on the different cash value products. Listen to this. Whole life is average after you pay all the fees. Now, they'll quote you something higher in this, but according to Dave, after you take out all the fees and everything else, historically, they average around 1%.
Wow. Universal
life after fees is 4.7%. And he said variable life with mutual funds that they build into these sub-account type products is 6%. This is all, like I said, coming from Dave Ramsey. And the reason is because they got heavy fees. And the only way, I loved how Dave pointed this out, the only way out is you got to die or you got to take a loan. Neither one of those are super exciting because we know with Dave, when we talk about debt, he's not loving loans. So you can imagine death or loans, that's not working. So it's not a great opportunity for you.
And so I'll hang over here and try to live on the slightly more PC side and say, okay, whole life, permanent life insurance might make sense in some situations. We're not willing to say that it absolutely never makes sense. So how do you as a consumer avoid getting ripped off? We think this is another one of those great places to go get a second opinion. If you're thinking about buying whole life insurance, or if you own whole life insurance, maybe it's worth talking to a professional, someone who's not trying to sell you the product, somebody who doesn't have a vested interest in it. Hey, does this make sense for me? Why do I hold this? Is this something that I actually indeed need?
And I think this is one of those products that's just getting left behind. I mean, a lot of times I've been managing money and doing investments long enough and talking about risk with clients that, as I told you, I've dealt and I've recommended permanent insurance in the past because in the past we did have estate taxes that kicked in at the $600,000 level or $1 million level. But here's the thing. Right now, estate taxes for an individual is around $11 million. For a married couple, and there's even portability, it's approximately over $22 million, and it's indexed for inflation. It's taken away the teeth of that big, bad boogeyman of estate taxes. Right. So if your insurance guy is pitching this as a great estate planning thing, question that because we've had some really big updates in tax law that has made that kind of antiquated in a lot of ways. And now, just like Dave Ramsey said, whole life insurance is the payday loans, the payday lender for the middle class. Let's go ahead and transition to the next category. Let's actually talk about payday loans. Now, here's the thing about payday loans. I've never been in a payday loan location, but when I was doing show prep, I did a Google search and just typed in payday loans on Google. Guys, you know what? Because Google knows where you live.
No.
So, well, they do. Believe me. If you ever want to know your GPS coordinates, because I had to do that for a light fixture, I put these cool light fixtures that one of Kevin
That needed
told me about.
GPS?
Well, yeah, you need to know. You put in your GPS coordinates in this in the switch, and you never have to adjust for daylight savings time. You know, it knows when it's dark and when it's light, so that you can use that as a timer.
That's Big Brother stuff.
You know how you find out your GPS location, your coordinates for longitude and latitude? Go on Google and type in, hey, what's my longitude and latitude? Google knows where you are. So it's one of those things, since Google knows where you are, when you type in payday loans on Google, there will be like 2 or 3 pages of all the local vendors. We live in what's considered a pretty affluent marketplace. Right? Wouldn't you agree that we live in one of the nicer parts of the country?
Sure.
Bo, there are pages of payday loan lenders. They're everywhere. And you're like, well, how can there be so many payday loan lenders out there? And why is this so bad? The reason there can be so many is because this is extremely profitable. These guys make credit card companies look charitable. Do you know how hard it is?
The average credit card interest rate is 16.92%.
16.92% seems charitable to charge you that compared to a payday lender, because guess what? Every time you go to a payday lender, their finance charge is typically 15 to 30%. Now you're like, is that 15 to 30% annualized? No, that's 15 to 30% is the charge. If you actually look at sometimes, because a lot of people will actually extend these loans out. They will essentially take an extension on these loans. You can push your APR, your annualized, percentage rate that you're being charged. It can be over 100% if you're running, because they're
if you
getting
let
that
it just
each
keep
time.
carrying out long term.
I mean, these are not good products. So be very careful. I mean, Bo, you said it best when we were doing show note prep. Cash reserves is your best friend.
That's exactly right.
You've heard that this whole industry is built off that 61% of Americans that can't get their hands on $1,000. That is so sad. Make sure that's not you.
Yeah, if you find yourself in a situation where you have to go get a payday loan or a tax refund advance, we get it. Life happens. We understand. But you really, really ought to go back and evaluate your cash reserves, where they're at, and how you're prioritizing financial order of operations. If you haven't gone to go listen to that show. You got to go back to step number 1 so you don't have to do this kind of stuff.